Hello and welcome to SU.TO Investment. This analysis is for Suncor Energy on the Toronto Stock Exchange as of 7th of August 2026 with a share price of 86 Canadian dollars 4. The full report is on SU.TO.ca. A hold at 86 Canadian dollars and 4 cents. Suncor is a cheap cash-generative integrated Canadian oil major that just posted a strong Q2. But oil has rolled over from the July spike and the post-earnings tape is still falling, so the short-term call is a hold. Medium and long-stay buy accumulate on a confirmed bounce. Second quarter was a strong print. Net income more than tripled to 3.7 billion Canadian dollars. Revenue was 17.5 billion, and cash flow, what Suncor calls adjusted funds from operations, hit a record 5.3 billion. Management affirmed the 60-cent quarterly dividend and stepped the monthly buyback up to $500 million. This is the integrated model working. The refining and retail side cushions the upstream, so the cash flow is steadier than a pure producer's. Quality scores 75. This is why the medium and long-term calls are buys. On forward earnings, Suncor trades around 11 times, and on enterprise value to cash earnings under 6 times, against an energy line closer to 8. The free cash flow yield is over 8%, return on equity around 19%, and the balance sheet is barely half a turn of net debt. Wall Street's consensus target sits near 103.5 Canadian, about 20% above today. On the numbers, it is cheap. The only debate is entry. Here is the near-term discipline. West Texas crude has slid back to roughly $78 to $83, having given back much of the July geopolitical spike, so the oil tailwind has faded to neutral rather than a driver, and the stock's own tape rolled over after earnings. Momentum is falling, and there is no confirmed bounce yet. That is why the short-term signal is a hold. We do not want to catch a falling knife. Notably, the prior short-term buy we flagged already worked, banking about a 12% win before we downgraded. Wait for the tape to base, then accumulate half size. The risk is the oil price, softened by the integrated model. A further de-escalation that drags crude lower takes Suncor down. The bear case is about 78 Canadian, roughly 9% below today, and a caution on the strong Q2. It was a peak margin quarter flattered by a record refining spread, so do not extrapolate it. Upstream production actually slipped. The tape is still falling, so a fresh short entry now risks catching a knife. Finally, a governance item to watch. The CEO succession announced on the 6th of August, with Rich Kruger handing over to Peter Zebedee in April 2027. Orderly and internal, but a transition all the same. Now weigh the risk against the reward. The bull case is roughly 23% above today, the base case, the most likely, about 15%, and the bear case a fall of about 9%, so you are risking about 9 to make 23. So, our call on Suncor Energy on the Toronto Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by SU.TO Investment at SU.TO.ca. The link to the full report is in the notes below. Have a great day.